Question 1. Risk, perils, and hazards. Which of the following best describes a moral hazard in the context of insurance? A. An individual's tendency to take more risks because they have insurance coverage. B. A physical condition that increases the likelihood of a loss, such as faulty wiring in a building. C. A situation where an insurer faces a higher than average risk due to individuals purchasing insurance only when they expect losses. D. A natural event like a flood or earthquake that causes damage to property. Answer A. An individual's tendency to take more risks because they have insurance coverage. Explanation. A moral hazard occurs when the behavior of an insured party changes because they are covered by insurance, leading them to take riskier actions than they otherwise would. For example, someone may be less careful about locking their car because they know the insurance will cover theft. Option B describes a physical hazard. Option C explains adverse selection, and option D refers to a peril, not a hazard. Moral hazards can lead to higher claims, and insurers try to mitigate them through underwriting, deductibles, and policy limits. Question 2. Georgia Casualty Insurance Regulations. Scenario question. Scenario. Mr. Wilson, a licensed casualty insurance agent in Georgia, has received a complaint from a client who believes that the claims settlement process on their policy has been unfairly delayed. The client is frustrated and wants to file a formal complaint with the Georgia Department of Insurance. What should Mr. Wilson advise the client to do? A. Inform the client that the insurer has the right to delay payments as long as they are still investigating. B. Recommend that the client file a lawsuit against the insurer directly in court. C. Suggest the client follow the proper complaint process by filing a complaint with the Georgia Department of Insurance. D. Advise the client to cancel the policy and switch to a different insurer to avoid further delays. Answer. C. Suggest the client follow the proper complaint process by filing a complaint with the Georgia Department of Insurance. Explanation. According to Georgia law, the Georgia Department of Insurance oversees insurance companies' adherence to claims settlement practices and ensures that claims are settled fairly and in a timely manner. Unfair claims settlement practices, such as delaying payment without a valid reason, can be reported to the department for investigation. Mr. Wilson should direct his client to follow the established regulatory process, as the department has the authority to investigate complaints and take disciplinary actions against insurers if necessary. Option A is incorrect because insurers cannot unjustifiably delay payment. Filing a lawsuit. B might be an option later, but is not the first recommended step. Option D would not address the immediate issue and may not be in the client's best interest. Question 3. Indemnity. Under the principle of indemnity and insurance, which of the following statements is true? A. The insured can recover more than their actual financial loss. B. The insured cannot be restored to a better financial position than they were in prior to the loss. C. The insurer is not obligated to pay for the full extent of the loss, even if it's within policy limits. D. Indemnity means the insured is entitled to a full refund of their premiums after a claim is filed. Answer. B. The insured cannot be restored to a better financial position than they were in prior to the loss. Explanation. The principle of indemnity ensures that the insured is compensated for the amount of their loss, but does not allow them to profit from an insurance claim. This is a key concept in insurance to prevent moral hazard and overinsurance. The goal is to make whole the insured party, placing them in the same financial position they were in before the loss, but not in a better one. Option A violates the principle of indemnity because it implies a profit from the loss. Option C is incorrect because an insurer is obligated to pay the claim up to the policy limits if the loss is covered. Option D misunderstands indemnity, which has no relation to refunding premiums after a claim. Question 4. Insurable interest in property. In order for a property insurance policy to be valid, the insured must have an insurable interest in the property, at which point A. At the time the policy is purchased, B. At both the time of purchase and the time of loss, C. Only at the time of loss, D. Only at the time the policy is renewed. Answer. C. Only at the time of loss. Explanation. In property insurance, the insured must have an insurable interest in the property at the time of loss in order to recover under the policy. Insurable interest means that the insured would suffer financial loss if the property were damaged or destroyed. Without this interest, there is no valid claim, as the principle of indemnity dictates that the insured cannot profit from the insurance. Option A is incorrect because the interest is not required just at the time of policy purchase. Option B is not accurate since it's only required at the time of loss, and option D is unrelated to the concept of insurable interest. Question 5. Coinsurance and coinsurance clauses. Scenario question. Scenario MS. Patel owns a commercial building valued at $500,000. She has a property insurance policy with an 80% coinsurance clause and has insured the building for $350,000. A fire causes $100,000 in damages. How much will the insurer pay, assuming the policy is subject to the coinsurance clause? A. $87,500. B. $100,000. C. $70,000. D. $80,000. Answer A. $87,500. Explanation. Coinsurance clauses in property insurance policies require the insured to carry coverage at a specified percentage of the property's value. In this case, MS. Patel was required to carry at least 80% of $500,000, which is $400,000, but she only insured it for $350,000. Since she did not meet the coinsurance requirement, the insurer will only pay a proportion of the loss, calculated as insurer's pay equals the amount of insurance purchased required insurance x loss amount. Insurer's payment equals $350,000 for 100,000 x 100 this is equals $87,500. MS. Patel is underinsured, and therefore the insurer will pay only $87,500 of the $100,000 loss. Options B, C, and D do not account for the coinsurance penalty. Question 6. Vicarious liability. Which of the following is an example of vicarious liability? A. A company being sued for injuries caused by its defective product. B. A parent being held responsible for damages caused by their child's actions. C. A business owner being held liable for a customer slipping on an icy sidewalk. D. An individual being sued directly for damages they caused in an automobile accident. Answer B. A parent being held responsible for damages caused by their child's actions. Explanation. Vicarious liability occurs when one party is held responsible for the actions of another even though they were not directly involved in the harmful act. In this case, a parent may be held liable for the negligent or wrongful actions of their child. Option A is an example of product liability. Option C refers to premises liability, and option D describes direct personal liability, not vicarious liability. The concept of vicarious liability is often seen in employer-employee relationships and parent-child scenarios. Question 7. Georgia workers' compensation laws. In Georgia, which of the following is not a benefit provided under the workers' compensation system? A. Medical benefits. B. Disability benefits. C. Unemployment benefits. D. Survivor benefits. Answer C. Unemployment benefits. Explanation. Workers' compensation in Georgia provides medical benefits, disability benefits, and survivor benefits to employees injured in the course of employment or their dependents in case of death. Unemployment benefits, on the other hand, are administered separately from workers' compensation through the unemployment insurance system. They are designed for individuals who are unemployed through no fault of their own and are not covered by workers' compensation. Options A, B, and D are all valid components of workers' compensation benefits in Georgia. Question 8. Errors and omissions insurance. Errors and omissions (EO) insurance typically covers which of the following? A. Physical damage to a client's property caused by the insured. B. Legal liability for bodily injury claims. C. Professional negligence or failure to perform professional duties correctly. D. Intentional fraud or criminal acts. Answer C. Professional negligence or failure to perform professional duties correctly. Explanation. Errors and omissions (EO) insurance is designed to protect professionals from claims of negligence, errors, or failure to perform their professional duties. It provides coverage for legal fees, settlements, and judgments resulting from such claims. It does not cover physical damage to property. A. Bodily injury claims. B. Or intentional fraudulent acts. D. As these are either outside the scope of professional liability or intentionally wrongful behavior, which is excluded from EO coverage. Question 9. Umbrella and excess liability insurance. What is a key difference between umbrella insurance and excess liability insurance? A. Umbrella insurance provides broader coverage than excess liability insurance, covering claims that may not be covered by the underlying policy. B. Excess liability insurance provides broader coverage than umbrella insurance, covering claims that may not be covered by the underlying policy. C. Umbrella insurance always has a low premium than excess liability insurance. D. Excess liability insurance covers all risks that are excluded under the primary policy. Answer A. Umbrella insurance provides broader coverage than excess liability insurance, covering claims that may not be covered by the underlying policy. Explanation. Umbrella insurance provides additional coverage beyond the limits of an insured's primary policies, and it can cover certain claims not included in the underlying policies. Excess liability insurance, on the other hand, only increases the coverage limit of the underlying policy but does not provide broader coverage for risks excluded in the primary policy. Options B, C, and D are incorrect because excess liability does not broaden coverage, and premiums and risk coverage can vary depending on the insurer and policy specifics. Question 10. Cancellation and non-renewal in Georgia. Under Georgia law, which of the following is a valid reason for an insurer to cancel a commercial property insurance policy after it has been in effect for 60 days? A. The insured has filed more than 2 claims in the past year. B. The insured has been convicted of a crime that increases the hazard insured against. C. The insured requested an increase in the coverage amount. D. The insured's building is more than 30 years old. Answer B. The insured has been convicted of a crime that increases the hazard insured against. Explanation: under Georgia law, an insurer may cancel a commercial property insurance policy after it has been in effect for 60 days only for specific reasons, such as non-payment of premium, material misrepresentation, or a conviction of a crime that increases the hazard insured against. Filing claims is not a valid reason for cancellation unless it falls under fraud or intentional misrepresentation. Requesting a coverage increase, C, or the age of the building, D, are not valid reasons for cancellation under Georgia regulations. Question 11. Property insurance valuation. In Georgia, if a property insurance policy uses the actual cash value (SEV) method for loss valuation, how is the payout calculated in the event of a covered loss? A. Replacement cost minus depreciation. B. Replacement cost plus depreciation. C. The market value of the property. D. The insured amount stated in the policy. Answer A. Replacement cost minus depreciation. Explanation: the actual cash value (SEV) method for valuing property loss calculates the payout as the replacement cost of the property minus depreciation. This method reflects the property's current value considering wear and tear or obsolescence. Options B, C, and D do not accurately represent how a CV is determined under a property insurance policy. Question 12. Flood insurance coverage. Which of the following is not typically covered by a standard flood insurance policy in Georgia? A. Damage to the foundation of a building. B. Damage to personal property in a basement. C. Damage caused by mudslides. D. Damage to vehicles parked on the property. Answer D. Damage to vehicles parked on the property. Explanation: standard flood insurance policies cover damage to structures and personal property due to flooding, but they generally exclude vehicles. Damage to vehicles would typically be covered under an auto insurance policy. Options A, B, and C are covered under a standard flood insurance policy. Question 13. Professional liability insurance. Which of the following professionals is most likely to carry professional liability insurance? A. A construction worker. B. An accountant. C. A warehouse manager. D. A taxi driver. Answer B. An accountant. Explanation: professional liability insurance, also known as errors and omissions insurance, is essential for professionals like accountants who provide services that could lead to financial loss for clients due to errors, omissions, or negligence. The other professions listed typically do not require professional liability insurance as part of their standard coverage. Question 14. Workers' compensation benefits. In Georgia, which type of benefit is specifically designed to compensate workers for wages lost due to a work-related injury? A. Medical benefits. B. Rehabilitation benefits. C. Temporary total disability (TD) benefits. D. Permanent partial disability (PPD) benefits. Answer C. Temporary total disability (TD) benefits. Explanation: temporary total disability (TD) benefits are designed to compensate workers for lost wages due to a temporary inability to work as a result of a work-related injury. Medical benefits cover healthcare costs. Rehabilitation benefits assist in recovery and return to work, and permanent partial disability (PPD) benefits apply when the worker has lasting impairment. Question 15. Policy exclusions. Which of the following is typically not excluded from a homeowner's insurance policy in Georgia? A. Damage from earthquakes. B. Damage from flooding. C. Theft of personal property. D. Wear and tear of appliances. Answer C. Theft of personal property. Explanation: homeowners insurance generally covers theft of personal property as part of its standard coverage. Exclusions typically include damage from earthquakes, A, and flooding. B, which require separate policies, and wear and tear. D, which is considered a maintenance issue rather than an insurable risk. Question 16. Georgia's liability laws. In Georgia, what is the legal doctrine that holds a property owner responsible for injuries occurring on their property due to unsafe conditions? A. Negligence. B. Strict liability. C. Premises liability. D. Vicarious liability. Answer: C. Premises liability. Explanation: premises liability is the legal doctrine that holds property owners responsible for injuries sustained by visitors on their property due to unsafe conditions. It falls under general negligence law, but specifically pertains to the responsibility of property owners. Options A and B do not specifically address property owner liability, and D relates to liability based on a relationship rather than property conditions. Question 17. Insurance policy rescission. Under Georgia law, under what circumstance can an insurance company rescind a policy after it has been issued? A. The insured decides they no longer want the policy. B. The insurer discovers a material misrepresentation by the insured during the application process. C. The insured files a claim. D. The insurer changes their underwriting guidelines. Answer: B. The insurer discovers a material misrepresentation by the insured during the application process. Explanation: insurers in Georgia can rescind a policy if they discover that the insured made a material misrepresentation on their application. This could mean that the insured provided false information that affected the insurer's decision to issue the policy. Options A and C do not constitute grounds for rescission, and D is not a valid reason for rescinding an existing policy. Question 18. Excess liability insurance. What is a primary purpose of excess liability insurance? A. To provide coverage for claims that exceed the limits of an underlying policy. B. To provide broader coverage for risks excluded from primary policies. C. To replace lost income during a business interruption. D. To cover only property damage claims. Answer A. To provide coverage for claims that exceed the limits of an underlying policy. Explanation: excess liability insurance is designed to provide additional coverage beyond the limits of an underlying policy, such as a general liability policy. It kicks in when the limits of that primary policy are exhausted. Options B, C, and D do not accurately reflect the purpose of excess liability insurance. Question 19. Homeowners insurance coverage types. Which of the following coverage types in a homeowner's insurance policy covers personal property while it is away from the residence? A. Dwelling coverage. B. Other structures coverage. C. Personal property coverage. D. Liability coverage. Answer: C. Personal property coverage. Explanation: personal property coverage protects personal belongings, including those located away from the insured premises, such as items taken on vacation. Dwelling coverage. A. Pertains to the physical structure of the home. Other structures coverage. B. Covers structures separate from the dwelling. And liability coverage. D. Protects against claims for bodily injury or property damage. Question 20. Georgia automobile insurance requirements. Which of the following is a mandatory requirement for automobile insurance in Georgia? A. Collision coverage. B. Comprehensive coverage. C. Bodily injury liability coverage. D. Uninsured motorist coverage. Answer: C. Bodily injury liability coverage. Explanation: in Georgia, all drivers are required to have bodily injury liability coverage as part of their auto insurance policy. This coverage pays for injuries that the insured driver causes to others in an accident. Collision and comprehensive coverage and B are not mandatory, and while uninsured motorist coverage D is highly recommended, it is not required by law. Question 21. Additional living expenses. In Georgia, which of the following situations would trigger coverage for additional living expenses under a homeowner's insurance policy? A. The homeowner decides to renovate their kitchen. B. A covered loss renders the home uninhabitable due to fire damage. C. The homeowner is temporarily away on vacation. D. The property is sold and the new owner moves in immediately. Answer: B. A covered loss renders the home uninhabitable due to fire damage. Explanation: additional living expenses. Coverage kicks in when a covered peril causes damage that makes the home uninhabitable. This allows the homeowner to claim expenses for temporary accommodations. Options A, C, and D do not qualify for ALE coverage. Question 22. Liability insurance limits. What is typically the minimum liability coverage required for a personal auto insurance policy in Georgia? A. $10,000 per person for bodily injury. B. $25,000 per person for bodily injury and $50,000 per accident. C. $100,000 per person for bodily injury and $300,000 per accident. D. $15,000 per person for property damage. Answer: B. $25,000 per person for bodily injury and $50,000 per accident. Explanation: Georgia law requires drivers to carry a minimum of $25,000 for bodily injury liability per person and $50,000 per accident. Option A is incorrect because it does not cover both bodily injury limits, while C and D exceed the minimum requirements. Question 23. Homeowners insurance exclusions. Which of the following is a common exclusion found in homeowners insurance policies in Georgia? A. Theft of personal property. B. Damage from lightning. C. Damage from termites. D. Fire damage. Answer: C. Damage from termites. Explanation: homeowners insurance policies typically exclude damage resulting from pests such as termites, while theft, A. lightning, B. and fire damage, D. are generally covered. Pest infestations and related damage fall under maintenance issues, which are the homeowner's responsibility. Question 24. Claims process. What is the first step a policyholder in Georgia should take after experiencing a loss covered by their insurance policy? A. Hire a contractor for repairs. B. File a police report. C. Notify their insurance company of the loss. D. Document the damages with photos. Answer: C. Notify their insurance company of the loss. Explanation: the first step after a covered loss is to notify the insurance company, as they will provide guidance on the claims process while documenting damages. D. And filing a police report. B. may be necessary. The initial action should be to inform the insurer. Hiring a contractor may occur later in the process. Question 25. Umbrella insurance. What is the primary purpose of an umbrella insurance policy in Georgia? A. To cover damage to physical assets only. B. To provide additional liability coverage beyond the limits of underlying policies. C. To cover personal property losses. D. To fulfill state-mandated insurance requirements. Answer: B. To provide additional liability coverage beyond the limits of underlying policies. Explanation: an umbrella policy is designed to provide additional liability coverage that exceeds the limits of standard insurance policies, such as auto and homeowners insurance. It does not specifically cover physical assets, A. personal property losses, C. or meet state insurance requirements, D. Question 26. Insurance fraud. What is the potential consequence for an insured individual in Georgia if found guilty of insurance fraud? A. Increased premiums. B. A warning letter from the insurer. C. Criminal charges and penalties. D. Immediate termination of the policy. Answer: C. Criminal charges and penalties. Explanation: insurance fraud is a criminal offense in Georgia, and individuals found guilty may face criminal charges, fines, and potential imprisonment, while A and D could also happen as a result of fraud. C is the more severe consequence, a warning letter. B is unlikely as a direct consequence of fraud. Question 27. Flood insurance waiting period. In Georgia, what is the standard waiting period before flood insurance coverage becomes effective after purchasing a policy? A. 30 days. B. 7 days. C. 15 days. D. 24 hours. Answer: A. 30 days. Explanation: generally, there is a 30-day waiting period for flood insurance policies before coverage becomes effective. This rule is in place to prevent individuals from purchasing flood insurance immediately before a flood event. Options B, C, and D do not reflect the standard waiting period. Question 28. Subrogation in insurance. What does the term subrogation mean in the context of insurance claims in Georgia? A. The insured's right to sue the insurer. B. The insurer's right to seek reimbursement from a third party for a claim paid. C. The process of calculating depreciation on a loss. D. The adjustment of premiums based on claims history. Answer: B. The insurer's right to seek reimbursement from a third party for a claim paid. Explanation: subrogation occurs when an insurer pays a claim on behalf of the insured and then seeks reimbursement from a third party that caused the loss. This process helps insurance companies recover costs. Options A, C, and D do not accurately define subrogation. Question 29. Insurance cancellation. In Georgia, how much notice must an insurer provide before cancelling an insurance policy for non-payment of premium? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Answer A. 10 days. Explanation: insurers in Georgia must provide a 10-day notice before cancelling a policy due to non-payment of premium. This regulation is designed to give policyholders a chance to rectify the non-payment issue. Options B, C, and D exceed the minimum notice requirement. Question 30. High-risk homeowners insurance. What might lead a homeowner in Georgia to be classified as high risk for homeowners insurance? A. Having a swimming pool. B. Owning a home in a historic district. C. Frequent claims history or high value items. D. Living in a rural area. Answer: C. Frequent claims history or high value items. Explanation: homeowners with a frequent history of claims or who own high value items may be classified as high risk by insurers, leading to higher premiums or difficulty obtaining coverage. While having a swimming pool may impact coverage, it is not a primary factor for classification as high risk. The historic district B or rural location D typically does not directly classify someone as high risk.